Hello everyone, welcome to Xylostar New Weekly Market Update with us, Mr. Amidian, Mr. Samar and Ms. Norhan.
A massive drop happened in gold this week, and we're seeing tariff wars to calm a little bit. So where is this leading us? We'll see soon.
Jerome Powell will be the chairman of Federal Reserve till 2026, and we got the corporate earnings of the United States for the first quarter, such as Intel, Tesla, and Boeing.
Hi everyone, welcome back to another weekly market updates from Xylostar. My name is Samar Ruslan. I'm a senior technical analyst at the Institute, and here we are kicking off our market update with NASDAQ, which is the biggest 100 companies, of course you guys know, as tech companies in US. So we can see that NASDAQ has done actually a break up above the trend line of the previous downtrend. So from here, it is at the resistance, as you can see, the resistance of 19,500. So we can expect to see a retracement to the trend line, which is at the level of 18,000, or perhaps a retracement as much as 18,800 or 9,000 before another attempt, or most likely a continuation in its up momentum. Right, so our next resistance would be probably 20,200. All right, so this is about NASDAQ. Going to Nifty50, we were expecting a retracement in Nifty50. However, it has opened early week with a slight to the upside, still holding at resistance. And we can see a very big engulfing formed there. So we might actually see now the retracement of Nifty50 to the trend line of the previous downtrend, and from here we can see another attempt and a very high probable breakout to the upside for it to reach the levels of 94,500. All right, so this is about Nifty50. Going to Bitcoin, as I've always been speaking about Bitcoin, guys, Bitcoin is that asset where you always want to look to buy way more than to look to sell. So from here, we saw a very beautiful breakout to the upside. There was a break and retest. I hope you guys entered there when it comes to the resistance. And a beautiful momentum to the upside. Another bull flag on a lower time frame, which caused us a break to the upside on a lower time frame, actually, not this time frame specifically. So from here, we might see a retracement before a continuation in an upward momentum, right? So the retracement could be to come at the level of 90,000. Right, or could go back to the level of 86. However, after this strong momentum, the higher probability that Bitcoin is not going to fall as much for a retracement, and then we can see a further continuation to the upper side. Right, so this is what Bitcoin is doing. However, we should keep in mind that yes, we are we always like to play on the bullish side when it comes to Bitcoin. However, this is a strong resistance. Right, so if we see a strong momentum to the downside from here, this could actually be just a liquidity grab because of all the orders above the levels of 88,500, right? Which is not very likely to happen. But if we see a strong momentum to the downside, as I just said, right, keep an eye that we could go bearish on Bitcoin for a short period of time, which I'm referring to as a week. All right, so keep that in mind. And either ways, if you want to look in for a sale, you need a confirmation from here, right? If you want to buy, then wait for retracement and a confirmation post retracement. And optimally, 90,000 are good. It goes to 86,000, then that's a discounted price. So this will be it about Bitcoin for the upcoming week.
So guys, let's check together the gold and the Euro USD, since the gold now is crossing higher prices. But nowadays and this week we are expecting that the gold he will consolidate or he will go to the bearish side. Why? Because he will take some liquidity in the downside, and because the gold has lost its bullish steam, as we can see here, and is retracing and consolidating now in between resistance and support area, and he's trying to make every week a new high. But this week we are waiting for a consolidation due to what's happening with the China and with the Trump and due to the tariffs and what's going on in the fundamental. So this is what we are expecting. We are expecting a consolidation in both sides, which is the support and resistance. Going to the Euro USD, guys, and let's see what's happening in the Euro USD. Before, the Euro USD was consolidating here, and what happened, he has some, let's say, sell side liquidity. Now he took the sell side liquidity and he's retracing again to this support from here, this liquidity from here, and now he's making a new triangle which may break down to the downside. And he's making triangle which may break to the downside and going to this lower lows from here. This is our outlook for the gold market and for the Euro USD, and see you guys next week.
Greeting everyone, I'm Masoud Amidian here. I'm Senior Fundamental Analyst at Xylos, our head office located in Dubai. Last week, financial markets, finally we saw a recovery, or better to say a small uptrend after a massive bearish trend which has started since the beginning of the year. So let's crunch the topic and talk about it more. I want to kick it with the economic indicators which we got last week. In April 2025, Germany's composite PMI dropped to 49.7, indicating return to recession. The services sector declined sharply to 48.8, while manufacturing remained stable at 48, mainly due to reduced activity in services and ongoing trade uncertainties. Regarding the UK, we got the UK retail sales number. The unexpected 0.4% rise in UK retail sales for March 2025 signals consumer resilience despite recent economic pressures. However, declining consumer confidence and concerns over upcoming trade tariffs may limit further recovery. As a result, the Great British Pound strengthened while stock markets remain cautious. But stay tuned, I will open this topic and I will extend it more in this session. In March 2025, Canadians' retail sales number rebounded by 0.7, recovering from 0.4% decline in February. This growth was driven by increased consumer spending, particularly in sectors such as home goods. The positive data bolstered investors' confidence, leading to modest strengthening of the Canadian dollar. U.S. Purchasing Managers Index. In April 2025, the U.S. S&P Global Composite PMI fell to 51.2, showing the slowest growth in 5 months. The services PMI weakened notably, while manufacturing PMI remained weak but steady. S&P's chief economist noted that slower service sector growth and cautious business sentiment signals a cooling US economy. Let's have a look also for the geopolitical events. 2 weeks ago, Donald Trump strongly criticized the Fed chairman and talked about possible removal. But this past week, he shifted to a more flexible tone. This helped preserve the independence of the Federal Reserve and increase risk appetite in financial markets. Meanwhile, serious discussion with China, Japan, and India improved market sentiment about the trade war, or better to say trade tariffs, and it led to modest growth this week. Let's have a look also for the corporate earnings in the US. Tesla reported a 71% drop in first quarter net income, with a miss on earnings and revenue due to reduced demand. Also from the Boeing, the giant company about the airplanes, beat expectations with a smaller than expected loss and $19.5 billion in revenue, boosted by aircraft deliveries. Eventually, Intel reported first quarter revenue of $12.7 billion, but it lowered second quarter guidance, caused a 10% drop for the stock price. Intel also has announced plans to lay off over 21,000 employees, representing more than 20% of its workforce. Let's go and jump to the upcoming week. For the upcoming week, about the corporate earnings, we are gonna get the earnings of the giant companies of the United States, such as Apple, Amazon, ExxonMobil, Lilly, Microsoft, Meta, Robinhood, Snap, Starbucks, Visa, PayPal, and Domino Pizza. So do not forget, these giant companies can completely change the sentiment of the financial markets and investors' mindset. Stay tuned with Xylo Star. See you next week.
Thanks guys for watching us. Don't forget to subscribe, put likes and comment.